Good morning, traders. I want to introduce you to a concept today called the time price opportunity. It's a foundational concept of auction market theory, which institutional traders and investors, people joining funds, they will learn this from a theoretical perspective when they first join. And for whatever reason, this is a concept that's rarely shared with retail traders. It's not particularly complicated, it's not particularly difficult, and once you grasp it, it will change the way you read the market, and your read and understanding the market will improve 3, 4, 5, 6, 7, 8 times. This is a very important lesson to have. It's going to help your trading enormously. It's a concept I use every single day when I trade the S&P 500 in the afternoon, and it's a concept that's going to be incredibly helpful for you. Now, I'm going to jump straight in with the lesson and try to make it as content rich and as helpful as possible. So without further ado, let's jump over to the chart and let me explain what a time price opportunity chart is. Now, here you can see a series, looks sort of like colored dots. And
okay,
I'm just going to turn Siri off, decided to interrupt me. No. We see this series of colored blocks and dots, right? And the way this works is each block on this kind of sideways mountain, one block represents 30 minutes of time. So for instance, you can see here, look, price traded in the S&P 500 at that 6737 region. Now, if price trades at that unit for any point during a 30-minute window, what you see is you'll get one block on the time price opportunity diagram here, right? One block equals 30 minutes. Now, if price trades there again, you'll get another block. So you can see here at the 6724, let's just make this clear. As clear as we can get it. You can see here at the 6720 on Monday of this week that there's 1, 2, 3 blocks. Okay, so during 3 30-minute windows of time, price was trading at that region. So the more blocks you have, the more time price spent at that level. And that means the longer the price spends at a level, that means the longer the market accepted that price as fair value. And that tells us something very, very important. Because in auction market theory, time equals acceptance. So the more time the market spends at a price, the more market participants who are agreeing say that's a fair value. So you can see on Monday of this week, the S&P 500, you can see that the majority of traders considered that 6,700 region fair value. There was no other place on the chart where price traded more frequently during that day than 6,700, right? That's where traders, investors were happy to buy and happy to sell at that region. And you can see all that time price spent there. In contrast to that day, look, 6730, price only spent 30 minutes there. And here at 6735, price only spent 30 minutes there. So price just skittered through that levels. There wasn't an agreement of fair value. But there was an agreement of fair value here at 6,700. Now what happens is when you have these time price opportunities marked, they act like magnets for price, right? If price moves away and fails to find new value, it often returns to these areas. So you can see here, look on the Monday, right? You see here, price went to these levels here, right? Price traded at 6670, 6660. But look, it didn't spend any time there at all. And because price wasn't able to find acceptance down here, price moved back up and look, it just bounced back up to that 600-700. It returned back to fair value. So if price moves away from these areas and fails to find new value, it's like a mean reversion tendency. And you can see as well, look, price tried to break out that value area high during the session, but look, it failed and went back to the fair value at the main price point, the point of control it's called, where price spent the most amount of time. So that means that you can see straight away that many traders, they focus just purely on when price is trading now. But smart traders ask, well, where has price spent most of the time? And that's what the time price opportunity shows us. It's not just the last price that matters. It's the price that the market has accepted over time, right? And what the TPO distribution does, it shows us a form of price map, showing us where markets feel comfortable, where price was clearly rejected, and then crucially, where future opportunities might lie, okay? I'm now going to show you how to practically use it, okay? So you'll notice these markings, VAH, POC, VAL, right? Now that is called the value area high, that's called the value area low, and that's called the point of control. Now the value area high and the value area low is the 70% distribution of TPOs occurring during the session. So in other words, during this session, say on let's go here over to Friday. So during this session on Friday, the 70% of TPOs formed within this area here, between the value area high and the value area low. And you see how that acts as an overhead resistance and an underneath support. And this is a trade that I took right on Friday and clicked it up in the room. This is one I think for the VIPs. I think I've also put it on in the main room. You had a very clear initial balance, false break, and then I went long, right? Seeing this price being rejected down here at the value at rejection, clear opportunity to go long, right? So the first thing you do, you want to look when you have a TPO is you mark it on the chart. I'll show you how to mark these up on the chart, right? And then you have your value area high and you mark that in. Now I can just do this visually, but that's basically your resistance level. Now your value area low is your support level. So if price is staying within these levels, you're expecting these to operate as support and resistance. The point of control also operates as kind of like a halfway line in a football game, right? You're either above the point of control or you're beneath the point of control. This is where price is most likely to trade and is where traders are happiest taking profit and exchanging contracts, right, at this price. So do you see now how useful that is? So look, even if you did nothing else, if you sold from the value area high back to the point of control, winning trade, right? Losing trade. And if you bought from the value area low back up to the point of control, right? Winning trade. So just recognizing these extremes, right, is helpful. Now, you can do another element of this. The next element is, look, when you break out of these value area highs, remember, when market is trading in between these regions, the market's called imbalance, right? It's balanced within that 70% region. It's not going too high, it's not going too low. Traders are happy to trade in balance. So when the market's balanced, you're looking for a value area high, value area low, right? You're fading these levels. But look what happens here at 4:30. What's happened? For the first time in this whole day, price has broken out above the value area high. It's gone from what? It's gone from balance to imbalance. Now, because price has moved from balance to imbalance, you know, it's very likely it's going to carry on. So for me, if I was trading that and looking at that, I'm thinking, aha, look, we've gone from balance, imbalance, so we're likely to move up to this next level. Now, how do you choose which level to go to? You've got the value area low, you see, of the previous day. See, that's the value area low from the Wednesday. So I would have known there, hang on, there's a very high probability I'm going to go from the breakout of this value area high to that value. And you see, you go from there to there. Nice, easy, simple trade. Where's your stops? Well, your stops other side of the point of control. Because you know, if you go back the other side of the point of control, you know you're wrong. You start to see how useful this is. And then notice this value area low here. This is now operating as what? Support. So you can see here, price looks over that value area low, pulls back, up again. And what you've got another value area high up here and a value area high up here. So you've got this. And what happens, the value area highs and lows from previous days operate as, now you start to see how useful this is. So there's a value area high. Oh, look, price goes into that value area, fades, moves back to this value area low, finds support, back up to, right? Back up to the new day. What have you got? Value area high, value area low. So you're fading from the value area high to the value area low. From the value area low to the value area high. And what do you have here? Hello, hello. We have a breakout of the value area high. So market has gone from imbalance to balance. Imbalance, you've got another opportunity to go long. Where's your target? You're looking, okay, there's a nice point of control there. Oh, here we go. Here's a nice couple of value area lows. That would be a reasonable target here, in line with the point of control. Do you see? Got these value area low, point of control. So where would you target? You target from the breakout, the value area high. You would target from here up to there. Where's your stop? Your stop to the other side of the structure, other side of the point of control. Fantastic. Another great trade. Next day, right? What do you got? Value area low, value area high. Price goes up to the value area low, value area high, value area low. Now, false break, false break, false break. 3 false breaks to the value area low and an initial balance forming. Price then breaks, builds above the point of control, above the point of control, support, support, support. What's this? Breakout. We've gone from balance to imbalance. So we've got next opportunity, right? And where's price going? Here we go, value area high, value area. You've got got an obvious target here. All those value area highs is an obvious target. And what do you get? You get a breakout from here all the way up to those value area highs. A great trade. Right. And now we come to today's price. Right, what do we got? Value area high, value area low. Look, market has gone from balance, right, to now imbalance. So market's imbalance and trying to trend higher. So this becomes your important area, right? Stay above this area, right? You're looking for longs. Do you see how useful that is? Can you see that? And when you do that sort of stepping price, you'll find that you'll be able to anticipate these transitions with far more clarity than simple candlestick charts, right? Just this is much easier to trade with. And when you combine it with the initial balance, do see my lesson on the initial balance. It will really, really help you, okay? Because you'll understand the power of that first hour of US trading as well. Okay, now let's look at the euro dollar. You can use exactly the same. You have the let me show you how to set up the TPO. So just go along to indicators. And it's just here under technicals, go for profiles, and that's it, time price opportunity. That's it, right? And you can just use the time price opportunity from the New York close, 10 o'clock, and then you can adjust the settings as you want. Block size, row size, value percent, have that set at 70. And you can also look and change it to a weekly time price opportunity. Right, so this is a time price opportunity for the whole week. And what you want to do is you want to put in the levels that are really important. So in a previous week, there's a value area high from a previous week, right? And there's a value area low from a previous week. Right, so there's a value area high, value area low. So then you got a new week, another value area high, and you got another value area low. So let's say you've got a bias, right, to go long in the euro dollar. Now this week, we got some great trades in the euro dollar. Right, let me just get rid of that. We got some fantastic trades. We got, remember that 1610? Do you see my recap? We had an inside bar up pattern from this 52 region. We had hot zone. We had a swing trade from this trend line break. We had 3 great trades, about 200 plus points, and we took profit at the 610. All right, just a great area to take profit. Fantastic trade, right? Now when you add a time price opportunity to it, look how helpful it is. That value area low here. So that weekly value area low, if you wanted to go long, look, cap price, but look, breaking out, it's going from imbalance back into balance for this week. So it goes up, and where does it find support? Right down this value area low. And where have we ended up taking profit? Right up at that value area high. Right, just up at that 610. Very sensible places to be moving around. And you see, when you see that, when you look at the chart in this way, you have a whole layer of information. And you will be able to spot extremes and transitions in ways that you would have only dreamed before you were introduced to the time price opportunity. It is incredibly helpful. Like here's one with the Aussie New Zealand dollar, right? Now I've got a bias to sell the Aussie New Zealand dollar. And do you see how, look, where do I want to sell from? Value area low, value area low. You see all this collection of value area lows here, value area lows here, right? So I know if I go up to this area, right, that's where I want to sell from. And I can have a very tiny stop. Because I know, look, okay, well, if I go up above that value area high, something's wrong. So straight away, I can start to look, well, I can have a relatively tight stop here. Right? See if I can move back up to that region. Because I've got all these time price opportunities. Now let's have a look. I can look at it on the weekly chart as well. So let's look at this weekly. All right, point of control, value area low. So, okay, well, there's a weekly value area low. So you might think, okay, I would prefer to enter on a test of the weekly value area low with my stop just above the point of control here. So that I could maybe get my stop a bit tighter. I've got a point of control here, point of control there. It's that those 2 fair value points. So I knew that people were very happy to trade at those levels. So it offers an obvious resistance level, right? Just like point of control here offered as support. Point of control there, right? A resistance and a sell-off. So I'm thinking here, if I wanted to be really safe, I could put it above the value area high for this current week. And I'll be very surprised if price went above there, you see? Do you see how helpful? Now this is on the base of the RBNZ. They've cut interest rates, and that's probably the last interest rate cut they're going to have now. And they've reached the end of their cycle, and so we're seeing this yield spread drop, right, in the Aussie 10-year bond yield versus the New Zealand 10-year bond yield. So in other words, selling is reasonable. So if I get back up to that level there, I'd be happy to sell. Based on what? Not guesswork, not price structure, based on the time price opportunity. So what the time price opportunity will do, it will show you areas of fair value, great areas to potentially entry. It can help you know where you put your stop. And it really helps set expectations as well. So let's summarize. A time price opportunity chart is a record of how long the market traded at a price. The more time at a price, the more the market accepts it. And what time price opportunities do, they build a market profile, a structure that reveals when markets are balanced, in balance, and as you've seen, these key trading zones that have been really helpful just this week, including lessons that trades I've been sharing on the VIP channel, and trades that are forming in my mind now, and fresh opportunities as we go into the next week. So understanding when the market has spent time is often more meaningful than knowing just where price is right now. And TPOs don't just show you the price, they show you that overall context. You want to be using them in your trading. I hope you found that helpful, and do go and refer to the initial balance lesson that is also on my YouTube channel. Have a look at that. And on top of that, also make sure to sign up to the VIP channel for more top opportunities, TPOs that can be shared, fresh levels to help keep you one step ahead of the market.